So until they join in, let me ask you all a question. So how many of you have ever worked in income tax practically?
Somyadip?
I'm not talking about the syllabus that we have in our chartered accountancy course. May you please raise your hands in the. Okay, I see one raise of hand. What about the rest? Are everybody a newbie here? I see some of my friends also here who have definitely worked in income tax, but they are just shying away to raise their hands. I'm not naming them currently, but yeah, they know.
Somyadip, or else give them an assurance that you'll not ask a question. Then
Yeah,
we might
yeah,
expect more raise of
yeah,
hands.
absolutely, absolutely. I'm not going to ask you any difficult questions, but yeah, you always have the luxury to stop me and correct me wherever I am wrong. So we have only 3 people. So assuming that you three five go off the track and say something which is not very relevant or very much correct, please let me know and I'll correct myself. It's a test of your attention as well.
Yes,
Yeah.
Karthikeya.
Uh, so yeah, Lasyasri, you can start off with the introduction.
Yes. Hello, everyone. Welcome and thank you so much for joining us today. I'm Lasyasri Sowgandhika Bonthala, your host for today's webinar on income tax litigations, ITR forms, and tax audit. Now, be honest. How many of you either delayed filing your ITR return or messed up staring at a notice from income tax department, wondering what just happened? I think we all have been at some point, right? Today's session is all about demystifying the
Yeah.
world, understanding tax compliances, how to file ITR in a smart way, and understanding few tax litigations. And to guide us, we have someone truly amazing, Mr. Somyadip Chakraborty, CA finalist, currently working as an industrial trainee at Standard Chartered Global Business Services Private Limited, and an enthusiastic public speaker with deep understanding of taxation and finance. Before we jump in, just a few quick things. Sure that this session gonna be like, I wish I knew them sooner. So don't forget to grab a pen and paper and to not to miss any point. One more thing, stay till end. We might have something extra for you. All right. Ready to decode the world of tax? Let's welcome our speaker, Mr. Somyadip Chakraborty. Over to you, Somyadip.
Hello everyone, and thank you Lasyasri for the wonderful introduction. Although don't deserve so much, and I'm still in my articleship phase, so I'm still learning with you all. And yeah, whatever I've learned in this 1.5-2 years, I would love to share it with you. And today our motto from this webinar is not to, have a deep knowledge about the act or learn what is income tax. right? Because there are some of the best teachers of the country who are taking hundreds of hours teaching you every each and every provision in detail. Today it will be a brief one half an hour webinar through which we'll understand how things go out in the practical income tax world, how it is different from what we study in our textbooks. And I'll also share a few personal experiences of mine during my articleship period. So without any further ado, I'd love to start. And another thing, just in case you want the PPT through from which I'm presenting, I would love to share it with you. Just ping me after the webinar personally on my LinkedIn or my WhatsApp, and I would love to share it with you. So with this, I would love to start.
Yes,
Uh,
we are
Please let me
waiting.
know if the second screen is visible or not.
Yes,
Can you
yes,
see?
yes, it's good.
So what are the expectations from this webinar? So we'll just take a brief dive into how we file income tax returns, what are the necessities, what are the tools at our disposal through which we can file income tax return. Our second destination would be income tax audit under section 44AB, which gives sleepless nights to many of us who are going to pursue our articleship from a mid-sized firm or under the direct taxation. I mean, under the direct taxation domain in a big four. We'll also go through another quarterly exercise, that is tedious return filing, which although is not as vast as the income tax return or income tax audit, but it can also generate a good amount of revenue. And we the most awaited part of the webinar, and in this we'll get to know what a limited scrutiny is, what a complete scrutiny is, and what are some of the ways through which we can tackle income tax scrutinies. And finally, income tax appeals, which is more or less quite similar to scrutiny and falls under litigation returns. So how many of you have filed? Please raise your hands through the Google Meet button. At least one return you have filed. May be your personal return, or it may be somebody else's return in your articleship. Okay, great. So we have quite a few people who have filed income tax returns, right? So what is income tax return? Income tax return is nothing but a return of income filed under the Income Tax Act. Now there are different types of forms for filing income tax returns, ranging from ITR 1 to ITR 7. So I'll just briefly explain what each form means. ITR 1, but you cannot file it because ITR 1 is eligible or applicable only for individuals. For HUFs, you have to go for ITR 2. And those individuals whose total income is greater than 50 lakhs, or they don't satisfy any condition in ITR 1, they have to file ITR 2. Plus, if you have capital gains, as in gains from sale of capital assets like shares, like house property, and all that. Now, the third ITR form is ITR 3. It is filed by all those who are filing ITR 2, and plus on top of that, they have a business income and are not filing return under any presumptive taxation scheme like 44AD, 44ADA, or 44AE. Uh, you can call ITR 3 the biggest or the most complicated ITR form amongst ITR 1 to 4, which is applicable for individuals, right? And this brings us to ITR 4, which is also known as Sugam, and it is applicable for those who are filing return of income under 44AD, 44AE, or 44ADA. So while I'm talking about these presumptive taxation sections, what is the difference in these ITR forms? Well, the level of detailing in which you have to fill the form is quite different. Like in ITR, for ITR 3, you need to fill the complete balance sheet of that business. You have to have books of account. You need to fill all the details of your balance sheet in the ITR form. But in ITR 4, you just need to fill one figure from your balance sheet, which can be your cash in hand, which can be your creditors, which can be your debtors, which can be your capital, and next, this brings us to ITR 5. Now, what is ITR 5? ITR 5 is not for individuals. It is for AOP, BOIs, AOPs, Association of Person, BOIs, Body of Individuals, and I mean, it can also be filed by not for profit AOPs as well. Is that enough?
No, Somyadip, I think your video has struck and we could not hear you.
You'll get this ITR 5 returns very late.
Just stop and reshare again screen. Maybe it will work.
Yeah, wait a minute. He is rejoining again.
I'm so sorry, so
Some
sorry.
network issues.
This was some technical issue on my end. So yeah, am I audible now?
Yes, Somyadip.
Let me share my screen once again. Now is it visible?
Yes, Somyadip, it's visible.
Yeah. So please let me know where I stopped. I mean, where you couldn't hear me. ITR 5, great. So ITR 5, as you know, is filed by AOP, BOIs, and this sort of returns, I don't think you will find a lot. There are although a few, but these are in scarcity as compared to the other four. ITR 6, it is filed by companies, and ITR 7, this is another complicated one, which is filed by not-for-profit organizations like trusts, like societies, and even Section 11, Section 8 companies. Now, this brings us to another very important aspect of ITR, that is 26AS, AIS, and TIS. In the end of the session, I'll show you how a 26AS and how an AIS, TIS looks like. But before that, let me tell you what it is. 26AS shows us the credit of all the TDS we have in against our name. Suppose we receive house property rent, like income from house property, and somebody deducts TDS. Suppose we have let it out to somebody who is liable for audit under section 44AB. Fine. So they have to deduct TDS if it exceeds the threshold limit of 2,40,000, right? So he'll deduct a TDS as soon as the rent crosses 2,40,000. So this will appear in this 26 AS. This will not only show the TDS amount, but will also show the total income that I've received from that person. All right. And not to forget, this is just an example of TDS. Under any section TDS is cut, the credit will be reflected in 26 AS. Now we have AIS and TIS. So what is AIS and TIS? The full form is of AIS is Annual Information Statement. Herein you can look into all your transaction which are reported to the income tax department. Like for example, banks have paid you this much of savings bank interest, this much of FD interest. You will see it column wise in AIS, TIS, and these are really helpful for filing returns, because some of the clients in practical world, they'll just give you their bank statements and they'll ask you to file their return without disclosing what sort of income they have received, or and whether TDS has been deducted or not. So these two documents help you a lot. And at times the clients try to act smart by concealing some of the incomes from us so that their tax liability is on the lower side. So these two documents help us to find out any other income which has been reported to the income tax government. Now, who needs to file it? Like I've already said this, so I'm not repeating it. Everybody needs to file their income tax return. But again, if you are an individual and or an HUF, but your income doesn't exceed the basic exemption limit, then you need not file your income tax return. But again, it is always advisable, and which you can always tell your clients as well, that you must file your income tax return, because it not only enables you to get visa, loans, but it is also a great document when it comes to India. Now, the key due dates. So this is something which is more relevant from an examination point of view, but still I'm repeating it. Like the non-audit cases, it's 31st July. For audit cases, it's 31st October. For transfer pricing cases, it's 30th November. So basically how the date is set for audit and non-audit transfer pricing cases is that is 30 days or 1 month after the due date of filing the audit report. Like you have to file the audit report on 30th September, and you have to file the return on 31st October. Similarly, the due date for filing audit report under form 3 CEB for transfer pricing is 31st October. So similarly, you have to file your return for that person. You have to file it on 30th November. Fair enough. Interest, penalties, and fines, these are plentiful in the Income Tax Act, and I'm not going to discuss this because it is something which you can always go through, and it is something which even we as CA students don't go through just before the day of exams. So yeah, there is no point discussing it. How many of you agree? So articleship insight, fair enough. It is just like it has been mentioned. Here you'll be dealing with a comparatively smaller clientele who more or less don't have a proper record of the receipts and payments. They'll just give you the bank statement and you have to prepare their return. In many cases, you'd also have to prepare their balance sheet. And now you will tell, how can we prepare balance sheet without a books of account? So what we do, this is a very important thing. You can make a note of it. So what we used to do in our articleship is that for a new file, I'm telling, for a new file, for the old file, you can always make it based on the receipts and payments and the previous year balances. But for a new file, what you can do is you can list out all the assets, make a total of all the assets, and make the capital as your balancing figure. Now this balance sheet can be used in the upcoming years for preparing the balance sheet, and you don't have to do this exercise again. All right. And I see a question from somebody.
Yes,
How,
Somyadip, let me help you in
how
this.
yeah, sure.
We have a question like how bank statements play a key role and what we have to exactly check among bulk yearly statements, because as you have said that many people will be giving just only the bank statements.
Yeah, yeah, yeah. So just in case you have time, what you do is make a summary out of that bank statement. You can either use Tally for that, or you can use any other accounting software which you're comfortable with, or you can also make the bank summary in Excel. Like a bank summary may be of 50 or 60 pages, but what you can do is make some common rows from which you are seeing incomes are coming or expenses are happening on a regular basis or a recurring basis, and you can add it up. So this can be useful. And again, let me remind you that income tax return is a return in which we need to disclose our income to the government, not the expenses. All right. So our main focus should be on the credit side of the bank statement. We can always ignore the debit side unless we are making the balance sheet. Fair enough. And under the new scheme, we don't get any benefits for under section 80C, under section 80D, or many other deductions under chapter 6. So looking at the debit side may not be that useful at times. So if you are facing time issues, then you can always scan through the credit side of the bank statement. Okay, we are done with income tax returns. Now we come to tax audit under section 44AB. As I already mentioned, this makes the life of an article very, very difficult in the month of September, especially those articles 1 a.m. is no big deal. So applicability: all businesses with turnover greater than 1 crore, or in case the business has received their income through recognized banking channels like bank transfer or account pay check, account pay bank draft, then the limit is 10 crores. For professionals, it is 50 lakhs gross receipts. And just in case they have received most of their gross receipts through recognized banking channels, it is 75 lakhs, and it has been amended through this particular finance act, that is Finance Act 2025. All right. Now, what are the different type forms of audit report? 3CA 3CD and 3CB 3CD. These are very much similar. If you ask somebody who has filed it, they won't be able to point out any major differences in it. But the only difference lies is that 3CA 3CD is filed by those SSEs who have filed their order. I mean, who have done their audit under any act. So it may be the LLP Act, it may be the Companies Act, and 3CB 3CD is for those SSEs like individuals, firms, HUFs who haven't done audit under any other act. Well, there are a lot of clauses in 3CB 3CD, and the major source using which we feel 3CB 3CD is the previous year forms. Although this is not the correct method, but due to lack of time, what we are taught in our articleship is to uh, look to is to have the previous year forms as the reference point, and yeah, we can fill up this year's form as well, making the certain adjustments which are like the turnover and all that, if there is any violation of any of the income tax guidelines or rules. Like I'm telling one, mm, I'm not able to recall the section, but there is a provision in income tax in which if you pay to somebody in excess of 10,000 using cash or a non-recognized banking channel, that expenditure will be disallowed. All right. So we need to report that in Form 3CB 3CD. Some for example, you have made a payment, a TDS applicable payment to a resident SSE without deducting TDS, then 30% of that expenditure will be disallowed. So we need to make all these declarations in I mean in the form 3CB, 3CD or 3CA, 3CD as the case may be. And this makes way for the 30% disallowance. All right. And another thing which I forgot to discuss is the form 10BB and 10B. Again, it is something which you won't find in Plentiful. It is only applicable for trusts or for what you call charitable organizations whose major aim is not to earn profits, and whatever income they earn, they okay, great. Money has said 269 SS and 269 ST. Great. You are great with sections, Money. Uh, now, yeah, form 10BB and 10B. This is where we are. So, using these forms, we file their audit report. And what's the rule? What's the basic rule? I'm just taking you through that. That whatever income they have earned in the entire year, they have to spend it for the objectives as mentioned in their trust deed or society registration certificate, whatever it is. Fine. And finally, the due date. Due date is 30th September. But on it is the income tax department has the power to extend this due date like they did it for this year. And if the taxpayers are facing any difficulty or if there is any glitch in the income tax portal due to which the taxpayers are not able to file their income tax return or audit, they have the power to increase the due date. Fair enough. Now the articleship inside. It is much more extensive than ITR, and we need to go through the books thoroughly. And let me tell you, here there is a penalty for CAs as well who are filing the income tax returns, so they need to be extremely cautious. And you must have read it in Audit, that true and fair view of the books of accounts. But but in this income tax forms like 3CA, 3CD, 3CB, 3CD or 10BB, 10B, you have to give a correct, true and correct view of the books of accounts. And you just cannot say that we couldn't check and it is only a true and fair view, because it is clearly mentioned true and correct when you have to thoroughly go through from an income tax perspective, obviously not from a statutory audit perspective. And let's move to the next part, that is TDS TCS returns. So this is a quarterly exercise, and the responsible deductors, as you can read in the presentation, it's any person making specified payments like salary, rent, interest exceeding the threshold limit. And what's the exception? Like everybody needs to deduct TDS if they're making any payment like these, any specified payments like this. But if you're an individual or an HUF and you are not liable for tax audit, then in that case, uh, deduction of TDS is not mandatory. What are the different forms? Form 26Q is for all payments except salaries. Form 24Q is TDS on salary. 27Q, uh, TDS on all payments made to non-resident except salaries. 27EQ is, am I audible?
Yes, Somyadip, you are audible,
Yeah,
and
yeah,
we have a question.
yeah. Do we? Yeah, please.
Yes, the question is from Vishnu Pranit. For making payments more than 10,000 in form of cash, what if the payment is made in individual amounts, like under 10,000 to individuals, but while passing the entry in the books, they pass the entry on a whole basis, whether it is allowed or disallowed?
See, as chartered accountants, our role is to only go through the books of accounts, not how they have actually made the payment, right? So we need to ensure that payment of 10,000 on a single day, exceeding 10,000 on a single day, is not made to a single person. Suppose I am paying Lasyasri, I have to pay Lasyasri 1 lakh rupees, and I want to pay her in cash. All right. So I can do that, provided I am breaking that 1 lakh rupees into 10,000 each day. I am paying her 10,000 rupees each day so that I am below the threshold. And in that case, it will not be disallowed. Just in case it exceeds on any particular day, it will be disallowed. And needless to mention, I can pay her 1 lakh rupees on one go. That is what happens in real life scenarios. I can pay her 1 lakh rupees, and in the books we can show it as 10 different entries on 10 different days. That's what happens in real life cases. Am I clear, Praneeth?
Yes.
Okay. So now form 26QB. 26QB is for people like us. Suppose we sell a property, or suppose TDS on rent. Suppose the rent exceeds the threshold limit. I just cannot recall it for 26QC. I'm really sorry, but yeah, in that case, we need not have a TAN number. Fair enough. For all the other forms like 26Q, 24Q, 27Q, and 27EQ, we have a TAN. We need to have a TAN number, and we need to be registered on the TDS portal as well. But for filing from 26QB and 26QC, we can file it through our PAN number, that is permanent account number. The due dates. For the first quarter, it's 31st July, second quarter, 31st October, third quarter, 31st Jan, and fourth quarter, 31st May. You must be wondering why it's 31st May and not 30th April. This is because, as you know, March is the year end, and businesses have a lot of work in the month of April. So just to give relaxation to the businesses, they are giving this 1 month extra time. And these are the due dates for filing the TDS forms like 26Q, 24Q, 27Q, and 27Q. For 27EQ, that is TCS, you have to file the return 15 days earlier. That is 15th of the above months. Am I clear? Now, this is a quarterly exercise which is restricted to those clients who are liable for tax audit, as I've already said. And I am telling you another practical thing. When we finalize tax audit and we come across cases wherein it was liable, wherein we were liable to deduct tax at source, but we didn't. In that case, we can tell the client that see, these are the payments on which you should have deducted TDS, but you didn't. So we have to disallow 30% of the said expenditure. So what the client generally does is he again debits the account of the payee and credits TDS payable, and he files I mean, if he hasn't filed the TDS return, he files the TDS return, and if he has filed the TDS returns already, he files a revised return showing that he has deducted TDS, so that we need not report it to the income tax government. And yeah, he is ready to pay the late fine and income interest, because that is way less than 30% of disallowance. Fair enough. Any doubts still here? If there are any doubts, you can just unmute yourself, and or you can even write it in the chat box. So I assume there are no doubts. So this brings us to the most awaited section, income tax litigations. So what is it? It is dispute resolution mechanism for tax matters. Like the department doesn't agree to what you have filed, or the department raises a question that why you haven't filed your income tax return. This is what income tax litigation is. And it requires a fair bit of knowledge, not only about the act, but also how to interpret cases apart from good negotiation and drafting skills. So this is quite self-explanatory that just having bookish knowledge of the act is not enough for litigations. You need to have some sort of an experience. You need to work under a seasoned professional. Only then you will be able to master litigations. And it is something that not every chartered accountant can do or does. And this is a fact. Now, hierarchy of income tax authorities. Firstly, we receive notices from income tax assessing officers. Fair enough. And nowadays, due to the faceless assessment, we also receive notice from the CPC, that is Centralized Processing Center, which is situated in Bangalore. And here you don't have any idea who your assessing officer is. So there is no way that you can go for a under the table settlement, if you know what I mean. Now, the after him comes the CITA, that is Commissioner of Income Tax Appeals. Then comes the Income Tax Appellate Tribunal, and then come obviously the High Court and Supreme Court. Now, as I've already said, the scope is limited and it's not something every chartered accountant gets the opportunity to do. And it's not like GST department. Like I've heard, although I've not worked with GST notices, but I've heard that the GST department issues notice even if there is a mismatch of 10 rupees. But again, the even in income tax, this has a great future because it involves an analytical aspect. You need to use your skills, you need to use your knowledge, you need to use your brain as well, and you need to be able to play with words and interpretation. And this is the creamiest part, as you can all understand, and everybody is going gaga over it. uh, we have a question. Give some examples of your own experience on litigations. Yeah, sure, I'll definitely share the example in the upcoming slides. This is just the preliminary slide, don't worry. Now firstly comes the scrutiny assessment under section 143.3. A detail, what is it? It's a detailed examination of the return filed. Now many times when we file our returns, we receive proposed adjustment under section 143.1a, wherein there is a mismatch in our AIS versus our return file, or something, a difference between the total credits in our bank account and the amount of gross receipts that we have shown. So that income tax can raise these preliminary adjustments, which we can either accept or which we can either deny using a one liner reason. Okay. Just in case the income tax department agrees to what we say, they don't raise a scrutiny, and if they don't agree, then they can they can open the scrutiny case. What are the two types of scrutinies? Limited scrutiny, that is generally system issued, and it is something which the system leaks out because of some sort of a difference in filing your income tax return versus the AIS 26S. Suppose the AIS has more income than you have shown in the income tax return. In such case, you can be selected for limited scrutiny, and complete scrutiny is a detailed examination of the entire return of income. uh, Herein the AO can ask for your entire books of accounts. Whatever they ask, you have to produce in front of them. When you receive income tax notices, you won't find it mentioned whether it's limited scrutiny or you will find it mentioned that it's limited scrutiny or complete scrutiny, so that you can tackle it accordingly. Finally, the timeline and follow up. Now, the notice has to be issued by the assessing officer from the end of the financial year in which the ITR is filed. Okay. Suppose for assessment year 24-25, that is financial year 23-24, we have filed a return on say July or October, whatever it is. Now, the assessing officer has to issue the notice under section 143.3 on or before 30th of June 2025. Okay. And they will just initially give you a notice that your file has been selected for scrutiny, and you just need to acknowledge it within 30 days that you have received the notice and are free to are willing to assist them in whatever manner possible. Now notices under section 142(1) of the act are issued for documents and information as required by the department to conduct the scrutiny proceedings. Now 140 section 143.3 or 143.2 is for issuing the notice or for opening the scrutiny proceedings. But asking you the what you call for asking you the documents, department issues notice under section 142.1, where they can ask you your bank statements, where they can ask you to produce your what you call your third party confirmations and so on. And if the SSC repeatedly fails to answer to the notices issued by the department can issue a suo motu order. That is, they can issue a order under section 144 by themselves. I mean, without giving the SSC any opportunity of being heard. Because yeah, because you have not responded, so we don't have any option. And let me tell you that assessing officers also have a due date. Yeah, best judgment. They also have a due date, which is generally 31st December, but it is generally extended to 31st March of the next year, to close up the cases. Fair enough. Again, the articleship insight: proper documentation in initial stages, that is ITR and audit, is a key to success in scrutiny proceedings. I mean, just filing the ITR and not keeping any documents and not keeping the basis on which you have filed the return can be disastrous. I mean, because at the time of scrutiny, you have to manage things up, and it can be, very beneficial or very easy for you to handle scrutiny cases if the records are properly maintained. Like if you have a business income, if you have business income, uh, hey Shrinu, can you please mute yourself? Okay. If you have business income, you can, what you can do is you can tally your balance. Okay, I'm coming to the question. Wait, you can tally your balance in their books versus their balance in your books at the time of finalizing your audit or your ITR. This is a good practice in order to avoid difficulties during the time of scrutiny. This is just an illustrative example. There are a lot of ways through which you can keep your documentations ready. All right. And I mean, as an article myself, I suggest everybody that whatever opportunity you may get, try to engage yourself into scrutiny. You'll definitely get to learn something. And yes, if your principal or your manager tells you to visit the income tax department, never hesitate. If they are accompanying you, it's a great thing. If they are telling you to go and negotiate with the income tax officer himself, this in itself is a great learning opportunity. In this, you'll learn a lot. Okay. So now reassessment under section 147. Hey Shrinu, can you please mute yourself? Thank you. Uh, Reassessment under section 147. So as you can see, just in case you are no, your file is not open for scrutiny under section 143 3, doesn't mean you are safe from the income tax department. They can again issue a notice under section 147 to reassess your books of accounts. Again, you can as you can see, assessing officer, the timeline for reopening it is 3 years. And if the office assessing officer has reason to believe that the income escaping assessment exceeds rupees 50 lakhs, I mean, sorry, exceeds 50 lakhs or not. I mean, if even if your income, the escaped income as per them does not exceed 50 lakhs, does not exceed 50 lakhs, with the prior approval of Joint Commissioner of Income Tax, they can open up your file under section 147 up to 3 years. Now, beyond 3 years and up to 10 years, they can open your file only and only if the escaped income exceeds 50 lakhs or more. Finally, fine. With the prior approval of Principal Commissioner of Income Tax. Please make a note of it, because if the approval is not obtained from the relevant authority or the authority mentioned in the act, you can you can challenge the validity of the notice. So yeah, you always check who has issued the notice, whether they are eligible to issue the notice or not, and whether they have obtained the prior approval. This is something which my principal taught me. And you can close the case at the very beginning. All right. Now beyond 10 years, it's not permitted. And in search and survey cases, which we generally refer to as income tax raid, if undisclosed income is found. Now, something which I have not mentioned in this PPT, I would like to add. Suppose you are dealing with a party who is under scrutiny for a particular year. Now, the department has the right to issue you a notice under section 133(6) to ask you for documents regarding your transaction with that person for whom scrutiny has been opened. And if you fail to comply with that notice, you'll have to pay a fine of 1500 rupees. So this is another reminder to be vigilant and always keep your mails updated, because they send this notice via email. And if you fail to respond, and even if it is not your file, you will have to pay the fine. Now, Section 148A was enacted via Finance Act to ensure that reopening of assessments is not done arbitrarily. Suppose you have not filed your return of income, they will issue a notice under Section 148A asking you why they should not reopen your case. If you are able to satisfy them with your responses, your case will not be issued. You will not be issued a notice under Section 148. Am I clear up to this point? I take it as a yes. Let me see if there is any question. What are
Yes,
the
Somyadip, we have a
consequences?
question from Priya.
Uh-huh.
Can I help you
Yeah,
in this?
yeah, sure. Please.
What are the consequences of non-submission of response or feedback to transactions which are reflecting in AIS? And kindly note that ITR has already been filed but not disclosed such income, and the time limit under section 148 has not been expired yet. There could be possibility to start reassessment proceedings based on the response provided.
Mm, the second part of the question is not very clear, but yeah, as far as I can understand, I mean, if the timeline has not expired under Section 148, then Income Tax Department obviously has the luxury to open up your accounts for reassessment. That's it. That as simple as that. Whether you have filed return or not, if they want to reopen your case, they can, provided they are adhering to the limits and they have obtained the previous approvals from the relevant authorities like the JCIT or the PCIT. Now the first part of the question, consequence of non-submission of feedbacks. Again, these are optional. I mean, it is better that if you submit, because in my articleship journey I have seen that income tax department also makes mistakes, quite a lot of mistakes. So just they may show incomes under your pan which is not actually your income. So you can what you can tell you can open the AIS portal and tell them that you don't agree that this income is yours. Fair enough. And yeah, this enables them to understand that this is not your income. And it will ultimately be for your benefit only. At times they issue a notice twice for the same income. I mean, they ask your feedback for the same income twice. So if you respond to it once, it's all right. I hope this has answered her question.
Ye- uh, Shivapriya, do you have any further doubts?
Siva, okay.
And I could see another person raising the hand, Komali PR. If you have any doubt, could you please drop it in the message box?
Yeah, you can even unmute yourself and speak out your doubt.
I think Karthikeya has to give that. Uh, Yes, Somyadip, I think you can go
Yeah,
to
I
the
think we are
field
good to go.
down the hand.
Somyadip,
I,
it's better to go with your flow. One in last we can discuss
yeah,
questions.
yeah, sure. Uh, why and when to appeal? Now, this is appeal before Commissioner of Income Tax appeals. When you are not satisfied with the AO or CPC's order, as the case may be, you can appeal before the Commissioner of Income Tax appeals within 30 days of receiving the AO's order by filing Form 35. What is Form 35? I'm coming to that. Now, firstly, before filing Form 35, you need to prepare a grounds of appeal. That is the reasons for which you are filing the appeal. Now, there may be n number of reasons against which in income has been added to your added in the scrutiny level. All right, some are correct as per you, some are incorrect. So for the ones you believe you can challenge or you have sufficient proof, you can prepare a ground of appeal for that. Suppose for an example, they have suppose you have received some payments from a particular vendor and they have added to it they have added it as your income because you have not disclosed it. But again, this was only a loan which you repaid it in the upcoming year, so you can tell them that, but you will tell them it during the course of the proceedings, but you just need to raise the fact that this particular addition which has been made to my assessed income is not correct. And some of the things wherein you actually believe you have concealed your income or your income tax return has is not correct, you can ignore those while filing your grounds of appeal. Now you have to file Form 35. It's it's a fairly detailed form in which you have to pay certain fees as per the amount of dispute, I mean, and which does not exceed rupees 1000, and you can file the form in order to file your appeal. And it is something which if you want to know, I can show it to you after the session, or maybe some other day, not today because it will extend the session because the form is quite big. Now after that, the process is just similar as scrutiny. They will you will receive notices under section 150 against which you have to respond from time to time. And just in case you are not able to gather all the information or you're not able to file the response within the specified due date, what you can do is you can ask for a adjournment. Fair enough. Now yeah, as I had already said, you can consider it as an extended version of scrutiny. uh, the mere difference is that we need to contest only for those additions or disallowances to which we don't agree. The only new thing to learn here is that grounds of appeal. I mean, you have to just prepare one-liner points and you have to keep it inclusive so that just in case you find some other grounds after after that specified 30 days, you can also mention, like you can add such a line in the end of the grounds of appeal that such other grounds as may be applicable and which we can which come to our notice in the due course of time. Now this is a brief overview of how the income tax portal looks. There is some issue with the portal currently, so I'm not able to share my screen and show it. So I just captured a screenshot when it was working, and yeah, I this is in front of you. When you log in, this is what the interface looks like. Now e-file, this is the more this is the more used part of the portal. Income tax returns, here you can file your return, you can view your form 26s, and there are n number of functions. Income tax forms, now this tab income tax forms is for forms such as form 3cb 3cd, form 10bb as we had discussed, and even forms such as form 26q 27eq. And yeah, these are the forms we can file. E-pay tax is something through which you deposit your tax. Yeah, you can always deposit your tax without logging into your profile, just using your PAN number. But if you have your login ID, you can always use it just to be on the safer side. And the fourth one is something which I would like not to comment upon, because I don't have any experience in submit tax evasion petition or benami property holding. So I'm extremely sorry that I have to skip this part. Now, another tab which is fairly important is pending actions. Work list. When the CA files form 3CA 3CD, you need to go to this work list, and this work list is filed by the chartered accountant himself, not by you. And you just need to go to your portal and accept it. If you don't accept, it will be deemed as the 3CA 3CD has not been filed. And we all know the penalty for not filing form 3CB 3CD, right? It's 0.1% of the turnover, or rupees 1,50,000, whichever is less. Response to outstanding demand. Suppose your income has been assessed under 143.3, or CIT has not reversed the decision, or even though it has reversed the decision, your entire demand is not extinguished, or your entire demand is not removed. In that case, you can pay the amount of your demand through this tab. E-proceedings, it's the most important tab when you come to scrutiny. If you open it, you will find two tabs. One is open cases, one is closed cases. And now Income Tax Department of recently, in the past 6-7 months, they have introduced some advanced level filters through which you can filter your cases assessment year wise, and respond to the notices. This is where you have to respond to the notices. Reporting portal, uh, this is again something which I have no experience. And compliance portal is the portal through which you can just the question that Siva asked regarding that feedback of AIS and all. This is the compliance portal, or some of the notices under section 148A for reopening your cases is issued in this compliance portal. Services, it is something which is quite self-explanatory, but some of the important things is rectification. The third item that you see in the drop down list, rectification is under section 144 154, in which if you feel the department has done some mistake, or you have done some mistake and a demand has been raised under section 143(1), that is the intimation after filing your return, then you can go to the rectification and file it. There are three options, that is reprocess the return if you feel there is some default on the department's end. That then tax credit mismatch, if you feel your entire TDS or TCS credit has not been given in the 26 as per the 26 years, has not been allowed to you. And another thing is wait, let me recall. Reprocess the return, tax mismatch, and the third one I'm not able to recall. I'm extremely sorry. I've just completely blanked out. Just in case I remember it, I'll share it with you. Fair enough. Now this brings us to income tax appellate tribunal. When this is similar. If you're not satisfied with the CIT appeals order, you can file Form 36 within 60 days of that order. And it is something which a chartered accountant or a lawyer has to file. You yourself cannot file in your cases, in most of the cases. However, there are some exceptions wherein you can also represent yourself. But it is generally advisable to always hire a tax consultant for filing income tax appeal at the appellate tribunal. It is similar. You have to prepare a grounds of appeal, and the additional step that here is that you have to prepare 4 paper books of all the evidences. All the evidences, as in whatever document you feel is important, you have to create a paper book, like all the bank statements, all the indirect tax returns, or anything that you feel is important from the case's perspective. You have to prepare four what you call copies of the paper book. One you have to submit at the ITAT bench, that is the judges. One is for the income tax department, and the against whom you are filing the case, that is the prosecution in layman's term. Then the ITAT office for the records of their department, and one with yourself. And you have to just get the sign, you have to get it signed from the ITAT office that you have submitted the copies and you are not using any different copy. While the SSC can legally file an appeal and appear before the ITAT on their own, it is generally advisable to engage a CA or a lawyer, as I have already stated. And yeah, this is what it is about income tax appellate tribunals. And before saying thank you, I just want to run you through a couple of things. Let me share that. Just a minute. It's not done yet. Entire screen. Is my screen visible?
Yes, Somyadip.
Yeah. So this is how a 26AS looks like. This is my personal 26S from 2-3 years back. So here you get the name of the deductor, 10 of the deductor. This is the interest that I received, and since it does not exceed the threshold limit, no TDS has been deducted. All right. And since I have only this particular income on which TDS is liable to be deducted, other incomes have not been disclosed here. And I think this gives you a fair idea. Now you must be wondering, if no TDS has been deducted, why it is showing in our 26S. This is because banks need to file everything with the income tax department. This is what I have learned, and that is why even if you don't receive any amount from the if any amount is not deducted as TDS, you still it will still be reported in your 26S. Now we are done with it. Let me open the AIS. This is AIS from the same year. Like you can see, this is the first part is relating to income tax deducted at source, and this is the specified financial transactions. Like I had received dividend income. Dividend income has to be reported by the companies. That's why it is shown in the AIS or TIS. Again, I had sold some shares or debentures, whatever, shares or mutual funds, whatever the case may be. And also the savings bank or the interest is also shown here. But I don't know why it's not showing here. But generally, your savings bank interest or your what you call FD interest, everything is shown over here. And not only the sale amount of your what you call the shares or mutual funds is shown, the amount of purchase you have made during the financial years is also reported to the income tax department. And finally, the TIS. It is basically the summary of the AIS. Like you can see, against every head, it's shown row wise. This amount of dividend, security, interest from deposit. Generally, the savings bank interest is also shown, but I don't know why it's not popping up here. And finally, I have the ITRV demo. I've edited it out. This is what appears when you file your income tax return. This is basically a challan, a receipt that you have filed your income tax return. I have edited everything out. So yeah, if you need a copy of the same, just let me know. And I wanted to show you an income tax form as well, but that is huge, and I believe that is not sufficient for a 1 hour or a half an hour webinar. So I just skipped out that part. Just a minute, let me open it again if anything else is to be shown. Yeah, now the questions, I'll come up to the questions one by one. If you have any questions, you can type it on the chat box, and meanwhile I have some questions that we received through the Google form, which I will discuss. This will not take much amount of time. I'll try to wrap it up in 5 to 7 minutes. The first question is from God of Surana. He has asked, what are the major and fundamental difference in taxation and litigation versus in a global organization and a mid-sized firm based on your practical experience? Although I don't have any experience of a global organization, I can tell you for a mid-sized firm that in a mid-sized firm, you are the one-man army or 2 or 3 people who generally look after it. You don't have a separate department for it, like in the globalized organization or the big fours, where everything is very much systematized. And again, the the enormity of the clientele. I mean, global organizations will cater to the listed entities or the bigger entities with tax demand of 1,000 crores or even lakhs of crores, but mid-sized CA firms generally don't have such a huge magnitude of clientele. All right. Second question is from Ritesh Kumar Das. How to memorize all the provisions of direct tax and indirect tax? Well, my friend, the major challenge over here is not to memorize the provision of direct tax and indirect tax. As in, when you go through your lectures and revise your things, it is not that difficult. You will find direct tax and indirect tax interesting as a subject, but the major problem arises when you try to solve the questions. Then you are not able to apply all the provisions together, and in the end, one or two small adjustments make your entire question incorrect. So what I can suggest is that you make your handwritten notes and practice as many questions as possible. This is the only way out, I think, and I think no faculty has the way to make you use all the provisions unless you yourself practice. The third question from Ruma Chakraborty, that is income tax, ITR, and tax related. The question is quite vague. If you are here in the meeting, can you please specify or can you kindly pinpoint what you exactly want to ask? I'm moving on to the next question. So that is from Sai Adarsh Patnana. Brief on filing of IT returns. Well, I have already discussed this in the webinar, so I'm not again going into it. The fifth question is from Siddharth. What to do in clause where the effect of ICDS is required? Well, for those who don't know, ICDS is a clause in the form 3CA 3CD or 3CB 3CD. It stands for Income Computation and Disclosure Standards. All right. It is a set of standards introduced by the CBDT to standardize the computation of taxable income under the Income Tax Act. And obviously, since this is a part of law, these standards override accounting policies for tax purposes and have to be disclosed in Form 3CD. Just in case your books of accounts, as per your normal accounting principles and standards, is different from what it is advisable under the Income Tax Act, you have to disclose it through ICDS. Now, for your easiness, let me explain you one example. Like ICDS 2 is valuation of inventories. The income tax allows only FIFO and retail method and prohibits methods like weighted average and LIFO, that is last in first out. We have to disclose the method that we have used in our books of accounts and adjustments we have made in order to bring our profit in line with the Income Tax Act. Similarly, ICDS 5, that is tangible fixed assets, allows depreciation as per the Income Tax Act, that is blockwise and not AS, and we have to provide a reconciliation with our tax depreciation. Now, I think this answers your question, Siddharth. Now, the sixth question is from Madan Gopal M. Interesting case or client that the speaker has worked with and how he solved the case. Well, since I am still an article, I don't have the full authority to solve a case on my own. I had just been an assistant to my principal. So, although it has been some time that I've personally solved a case, but I mean personally assisted in solving a case. But I recall one case which was relating to a big what you call government department belonging to the Assam state. I cannot take the name of the client for obvious reasons, but yeah, we assisted in them in their scrutiny. The difficult part of the scrutiny was not how we answered the questions, because it's a government department, so there is no question of concealing our income. But the thing is, the accounts in themselves were so huge, being a government department, that the submissions that we used to make to the income tax department used to be of 50-60 pages, and the notice itself used to be of 10 or 12 pages. Okay, so this is how big the return used to be. And just to give you the magnitude of the client, we as our firm also does the accounting thing for that client, and we charge 6 lakhs every month only for accounting. So this is the magnitude of the client. So what was the case is that it was a government department running on losses. Fair enough. So when your file is consistently under loss, the income tax department generally issues a scrutiny. If you don't have sufficient, if you have a great, very huge receipts, but you don't have sufficient profits as per the industry standards. So since it was consistently under losses from a lot of years, so they raised the scrutiny, and therein they asked all the items that we had mentioned in the balance sheet, all the schemes of the government. We had to extract it out of the books of account, and we needed to, manipulate is not the exact word. We needed to, I'm not able to find the exact word, but draft it as per the questions asked, because we don't want to raise the issue further. So we don't want to give any extra information to income tax department over what it has asked. So that is why we this making the submissions itself took a lot of time. And again, in the end, the department agreed to most of our arguments, but we also asked them for a video conferencing. We have that option of asking the assessing officer for video conferencing if we are not able to explain them again and again. But again, the assessing officer was rigid, so we had to appeal in the CIT appeals, and I think it is still. I have left the firm, so I don't have a track, but I think the case is still running. So the key thing in solving the case was that we had every record maintained, not that vaguely, but since it was huge, we had to be very careful about what we submit to the income tax department, because we don't, as I have already said, we don't want to give or emit out extra information to them over what is required or what has been asked by them. There are more cases, but due to lack of time, I am I'm not able to share more, so please understand. And yeah, next question.
Sorry for the interruption, Somyadip.
Yeah,
I just have a small announcement for all the participants in the webinar.
great.
As I have mentioned earlier that we might have something little extra in the end, I would like to give a small guess. I would like to give a small clue for that. To know the clue, you have to wait till you listen to another question of Somyadip. I'll be revealing only after the other question.
Yeah, sure. I'll move on to the next question. Next question is from Kinjal Dharmik. Oh no, next question is from Ramachandra. Sorry, Kinjal Dharmik is the next one. Clarity regarding taxation of stock and commodities under regular business or speculative business or capital gain. This is a very good question. Like for regular, if you want to show stock trading as your regular business, if the trading is frequent and intentional, and it is taxed as your normal business income at the normal slab rates. If you are dealing in intradays, but it's not your business, and you are dealing in derivatives or commodities or what you call options and futures, it is taken as your speculative income, and it is taxed at the rate 30%. Finally, the normal LTCG and STCG, which we are all aware of, that is the delivery trades, they are taxed as per the provision of section 112A and 111A of the Income Tax Act. And therein you need not show it as your business income, and you have to show it as your capital gains. The next question is from Kinjal Dharmik. While seeking CA industrial training, I'm facing many problems. Okay, this is a question regarding CA industrial training. So, Kinjal, I would love to connect with you after this webinar, but since this webinar is only for income tax, so I'm not able to discuss these questions with you currently. Next question is from Chetan Reddy.
With all due permission from Somyadip, shall I tell the participants the surprise?
Sure. I'd love to. I would love to listen as well.
Yes, we are having a short quiz of 5 questions after the Q&A session, where the winners will be posted in our informative garage page.
Great. Can I participate as well?
No.
Okay, fine. I won't. So the next question is from Chetan Reddy. Does online assessment reduce the significance of involving a chartered accountant? See, this is where litigations come into the forefront, which can't easily replicate humans owing to the element of personal judgment and ability to play with the interpretation. You need to know how to interpret the Income Tax Act, and not only the Income Tax Act, man. You have to be able to interpret a lot of other commercial laws like Evidence Act, Companies Act, LLP Act. Only when you have the combined knowledge of all of these acts, then you can be a good litigant. And obviously, some tech improvements like CAGPT by our beloved ICI has definitely made tax filing a lot easier. If you give a good prompt of all your income, all your eligible deductions, it can give you a good tax advice. But when it comes to litigations, I still think CAs have the edge, and there is still a lot of scope for that. And another line, that is tax audit, that we discussed in this webinar, it's not the future is not that bright, and it will eventually dwindle out in the upcoming years to come. Next question is from Shivani. What roles can I apply for in tax litigations when we have no such knowledge of tax? See, Shivani. Okay, what roles can in tax domain? Okay. What roles can I apply for industrial training in tax domain? Like you can apply like IOCL and other oil companies. They have a lot of vacancies for not a lot, obviously. They have vacancies for industrial trainees. Therein, your income tax roles or income tax knowledge can be greatly helpful. But when it comes to larger MNCs, I'm not sure whether they have straightforward direct tax roles available when it comes to industrial training. But again, some international taxation, corporate tax advisory, tax technology like using some Python and all that for creating automation and ERP based tax reporting seems to be in demand. Although I am not the correct person to answer this, because I personally have no knowledge about direct tax in industrial training. Next question is from Vivek. How to start practice in tax litigations when we have no such knowledge of tax? Well, this is something you really need to avoid, Vivek. Getting into litigation without prior experience or knowledge is a disastrous move, and because here you need to be able to play with the provisions of a lot of acts, as I have already mentioned. Firstly, the first step that you can take is to work under an expert litigation expert. Need not be a chartered accountant. You can also work under a lawyer as well, just in order to gain some experience before you can jump into this complex field. Next is Chalapati. I'm sorry if I'm not pronouncing your name correctly. Virtual digital asset, crypto filing, and NRI income tax return. Well, crypto filing, as our Nirmala Sitaraman ma'am has already said, it will be taxed under section 115 BBH at the rate 30%, and no deductions would be allowed. And TDS at the rate 1% will be deducted on payments transaction exceeding 50,000. This is something which you can always go through. This is not something very great. NRI ITR filing. This is something which I only have a single experience in my articleship. Only I had a single client with such an experience. Suppose that client is an NRI and he wants to file ITR, but he's an Indian citizen and has to file ITR in India. So he has to account for all the incomes that he has earned in India and taxable in India. Then another thing, another form that he should file is DTA, that is double taxation avoidance agreement. Because this is when double tax avoidance treaties come into place. Suppose you have earned some income in America, that is the United States of America, and you have already paid taxes on the same, but again you don't want to you would definitely not like to pay tax again on the same income in India, right? So this will be double taxation. Fair enough. So many countries have double taxation treaties amongst themselves. So what you can do is you can file this form 10F to get the DTA benefits. And just in case you are an NRI and your income tax, that is your income liable for filing taxation, does not exceed 2.5 lakhs, ITR filing is not mandatory. That is, your income does not exceeds the basic exemption limit. Now, this was all the questions. These were all the questions that were asked through Google Forms. If there are any other questions, please feel free to ask. I'm here. I'm all yours. And yeah, this is all from my end.
Thank you, Somyadip. And I request anyone having any questions, you can post them in the chat box.
Do we have any questions till now?
Yes, one person have asked that she has a doubt in the capital gains.
You okay? What sort of doubt?
Oh, she did not message us in the message, so maybe
Yeah, sure.
you're waiting for the question. Karthikeya, better we'll ask them to raise their hand and we'll unmute them in a sequence.
Thank you. I have doubt about capital gains. Okay. There's a vague question. I found that question. As Priyanka has said, I have doubt about capital gains. Now, seeing this is quite a vague question, let me just walk you through in 1 minute how do we file income tax return for capital gains. Like, just in case you have dealt in securities in this year, and it is not a speculative trade. It is a delivery trade, not an intraday. So what you need to do earlier, you have to file it for script. You have to file a script wise. Suppose you have n number of shares, Reliance shares, Tata shares, Adani shares, and a lot of shares. You had to file the gain or loss on each and every script wise. Fair enough. Now income tax department has made it very simple. You can file your you can disclose your capital gains in just two entries, one for long term capital gain and one is for short term capital gain. You just need to tell the total consideration that you have received from the sale of shares, and you have to disclose the total cost of acquisition, total purchase price and total sale price. That's it, a total, not script wise. For income, but you have to create a bifurcation between long term and short term. That's it, nothing else. It is very simple, and if you are using a utility like Computax, it is even more simpler. So yeah, this was a 1 minute walkthrough.